Hello, this is Ahura. Will be with you to review the Bank of England meeting in financial market reactions. As we were expecting, BOE cut the rates by 25 basis points to 4%. No surprise here, but the main surprise it was among the voters because five members only they vote for rate cut, while the four members they voted to hold in the current rate. That was a surprise because before the meeting, we were expecting to see eight votes for rate cut and only one vote for holding the current rate. That was somehow telling us that the Bank of England is more hawkish about the current situation than expected. The main reason we can understand in the statement of MPC members after the meeting published, it shows that in the second quarter, the inflation or CPI inflation increased to 3.5% in the second quarter, and you're expecting to see 3.75% for for the inflation for the third quarter, and especially in September, members expecting to see the consumer price index or CPI at 4% just in September. And then it started slowing down to reach 2% target in 2026. That was somehow these two items, they were somehow the surprise in the market. So the ratio of the votes and also the expectations, as they are expecting higher inflation right now, while they lowered their GDP increase expectations. I mean, they are expecting now to see the UK economy to increase slightly slower, while the inflation should be slightly more. The main reason of this expecting inflation, is mostly because the energy prices, as you know, the oil price increased in recent months. At the same time, we know that the tariffs reaction and the market reaction to the tariffs also was the increasing the some prices. Somehow we can say that that Britain, United Kingdom reached some agreement with. I mean, they had agreement with the United States about the tariffs, but at the same time, the uncertainty in the market lowered the uncertainty. But this uncertainty doesn't mean that they will not have any tariffs there. They're going to have the 15% for some products, for some other products 10%, for some other products 25%. So still the tariffs are there. So we have more tariffs right now. If you compare it with before Mr. Trump's before Mr. Trump's running the White House, then we know that now we have the more tariffs there. So which means these tariffs can affect negatively the British economy, as we could see in the PMI numbers, in the retail sales numbers. All these numbers are telling us that the UK economy is moving forward much slower than previous expectations. So that's why we were expecting to see more votes for rate cut. But at the same time, the members, they voted less. I mean, the less number of the members, they voted for the rate cut, because at the same time that we're expecting for a slower economic growth, there is a risk of higher inflation. As mentioned earlier, they're expecting to see the inflation at 4% again, while 4 months ago, this inflation was around 2%. So this higher risk for inflations made more members convincing to to vote for holding the current rate before moving forward to see the lower inflation in the market. So that was the hawkish reaction of hawkish reactions of Bank of England to the current economic condition and inflation, and that's why we could see the slightly stronger British pound against its rivals, because higher rates for longer. Even thought it didn't happen in this meeting, and they finally cut the rates. But now, markets expecting to see this 4% interest rate for a little bit longer period before they cut the rates. So this higher for longer expectation of the interest rates made more income. I mean, for the more demand for the British bonds. So this higher bonds demands and higher rates supports the British pound to get slightly stronger against its crosses. So that's why the British pound gets given somehow a positive reaction to these data and slightly right now stronger against the rivals, especially against US dollar index. At the same time, higher interest for longer means that less companies can get the loans, so we will have a less loans. As we earlier today we had the reports from the house price as well, because we saw that the mortgage rates also increased to 6.99%, if I don't mistake. So all these data says that the money in the market gets a little slightly to have the loans or to support the economy. It gets slightly harder, so we will not have easy money too much as the market expecting for the longer term, for midterm and long term. That's why that can affect the economy and the companies slightly more negative. At the same time, we know that the earnings reports already is getting at its last stages, so we will not have too much positive environments coming from environments and emotions coming from positive earnings. So that's why the downturn sounds like it was a to U-turn to go towards the downturn. At the same time, the geopolitical tensions, especially what's going on between the Russia and Ukraine, is going a little bit takes a little bit longer time. I even thought there are some voice about maybe they come and sit on the table for in the next days, but still there is still high. All these items, all this data together, they can put the pressure on the stock markets. While for the stock markets in the United Kingdom, we are expecting negative we are expecting negative outlook in the short and midterm. For British pound, in the short term, we can say that yeah, it can have a positive reaction and can support the British pound against its rivals. But at the same time, don't forget that these data means the UK economy can get a little bit more pressure, which is not again in the mid and the long term is not in favor of the British pound. So what I see here, this positive reaction from the British pound could be the sell opportunity for British pound against its rivals, as as mentioned earlier, these data can be the somehow the let's say that this draw is Fibonacci from previous move down. So this area is slightly higher than 61.8%. So which means that if we don't have we don't see the prices higher than 1.35, actually somewhere here. If the price reverse especially cannot move above 1.35, then we can say that all these recovery could be the idea of selling higher. I mean, could bring this idea of selling higher opportunity in the market. So that was the market's reaction and our expectation. Well, as mentioned, British stock markets could not get too much benefit from this decision. As for reaction in other markets, for example, if we check the gold market, these data cannot directly affect the gold market, the British pound movement, or the BOE decision cannot directly affect the gold price, but at the same time could have somehow a positive reaction right now with this decision, because more pressure on the stock market can get some money out of the market and looks for more safe havens, which is the gold can be one of the options to go there. Same almost a positive reaction we can expect from the Bitcoin as well, as the demand for the Bitcoin, it can just like money which comes from out of the UK stock market can move some part of that to the cryptocurrencies and especially to Bitcoin market as well. But as mentioned, it's not like a big effect on the market. It's like just like maybe some positive effect. It doesn't, as mentioned, it's not going to have a direct effect. So that was the decision and market reaction. One more time, I have to mention what happened. Let's say what happened in the market, review what happened. The Bank of England cut the rates by 25 basis points, but the surprise was not the decision because it was expected. The surprise came from ratio in the votes, as 8 members expected to vote for the 25 basis point rate cut, but only 5 members they vote for rate cut, and 4 members they were looking for holding the current rates. That means the hawkish demand or hawkish tone in the statement, while at the same time we saw that the Bank of England lowered the economic growth expectations and increased the inflation expectations. Yeah, that was the BOE meeting, decisions, and market reactions. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.